Hello friends, welcome to Letstute Accountancy. So we have already done 2 questions on consignment accounting. So now we are starting with question number 3. Now in this question we are going to see some more adjustments, some more new transactions. Shalin Traders purchased 5,000 sarees at rupees 100 per saree. Out of this, 3,000 sarees are sent on consignment to Zing with an instruction to sale at the price of 150 per saree. The consignor paid 15,000 for insurance and freight. Now over here, this is very important that Shalin Traders who purchased sarees and he sent the sarees to Zing. So Shalin Traders would be consignor and Zing would be consignee. Now Shalin Traders has purchased 5,000 sarees, but out of which only 3,000 sarees are sent on consignment. So in this consignment accounting, we are going to deal with only this 3,000 sarees, not 5,000 sarees. So you do remember that, because on consignment only 3,000 sarees are sent. So the remaining 2,000 sarees would have been sold in his normal business. So we will not account for that 2,000 sarees because we are doing only consignment accounting. Okay. And this sarees are purchased as 100 per saree. This were consigned to Zing with an instruction to sale at 150 per saree. Consignor paid 15,000 for insurance and freight. During transit, 100 sarees were damaged by fire. Now this would be your abnormal loss. Shalin Traders received 10,000 from insurance company. Zing took the delivery of the remaining saree. So out of 3,000 saree, 100 sarees is already destroyed by fire during transit. So remaining sarees is received by the consignee. Now consignee sold 2,500 sarees at rupees 160 each and incurred 5,000 for selling expenses and remitted 2,50,000 to Shalin Traders on account. They are entitled to a commission of 5% on total sales plus a further of 25% commission on any surplus price realized over 150 per saree. So now if you see over here, Zing has sold 2,500 saree as 160. Zing was instructed to sell the saree at 150 per saree. So Zing is selling at 10 rupees extra each saree. And if you see the commission, there are 2 types of commission. One is ordinary commission of 5%. Another is overriding or surplus commission of 25% on any surplus price realized over 150. So since Zing sold the saree as 160, on extra 10 rupees, Zing will get 25% commission. Now one of the customer to whom the goods were sold on credit could not pay the cost of 25 sarees. Now in this case, if the Del-Credere commission is given to the consignee, consignment data appears in the books of Zing, that is consignee, and all the collection work is to be done by the consignee. Also, if there is any bad debts, will be borne by the consignee if Del-Credere commission is given. But if you see the question, there is no Del-Credere commission which is given. So if there is any bad debts loss, this would be borne by whom? Consignor. Also consignment data will appear in the books of consignor. So here that thing has happened that one of the customer to whom the goods were sold on credit could not pay the cost of 25 sarees. So on 25 sarees which was sold on credit, there is a bad debts. Now if you see the question, they have just told you that 2,500 sarees are sold, but out of which how much is for cash and how much is for credit, that we don't know. But that is for sure that 25 saree is for sure on credit. So I can say out of this 2,500 sarees, 25 is for sure on credit. Now remaining saree would be can be on cash or it can be on credit, but they have not specified about the remaining saree. Let us see the rest of the question if they specify something. 1,500 sarees were sold by Shalin Traders at 140 each. Now these sarees are sold by whom? By Shalin Traders, means consignor himself at 140. So this is not a consignment business, because out of the 5,000 saree which was purchased, only 3,000 sarees were sent on consignment, of which Zing had sold 2,500 saree, 100 saree were destroyed by fire. Out of that remaining 2,000 sarees, Shalin-Trader himself sold 1500 sari. So this is on behalf of the normal business or on normal business by Shalin-Traders. So we will not pass any entry for this 1500 sale of sari, because this will not be in case of consignment accounting. So this is not a part of consignment. Okay, since we are doing only consignment accounting, we are taking the transaction which belongs to that consignment business or consignment trading. This 1500 saris are not a part of consignment, so we will not pass any entry for this 1500 sari in consignment accounting. If we were to do all the accounting of Shalin-Traders, then we would have passed this 1500 sari sale in his normal books of accounts. Okay. Owing to fall in the market price, the value of stock of sari in hand is to be reduced by 5%. So over here they have given you market value of the sari, which is to be reduced by 5%. Since the market value is to be reduced, while doing the closing stock, you will have to do cost or net realizable value, whichever is lower. People, we have discussed this in the session when we have done valuation of stock. In valuation of stock, we do cost or net realizable value, whichever is lower. Net realizable value, it is to be done when they specify the market value. So over here they have specified the market value, so you'll have to compare whether cost of closing stock is lower or net realizable value of the closing stock is lower, and whatever is lower, that would be your closing stock amount. So if you are still confused for that, you can refer that session again and then you can start solving this problem. You are required to prepare consignment account, Zing account, abnormal loss account and consignment debtors account in the books of Shalin-Traders. So everything is to be done in the books of consignor. No accounts is required to be prepared in the books of consignee, because they have not asked you. So you have to prepare consignment account, Zing account, that is your consignee account, abnormal loss account, this is your loss by fire account, and consignment debtors account. Since Del-Credere commission is not given, consignment debtors will appear in the books of consignor. Okay. Now, out of this 2500 sari, we have decided that 25 saris is already on credit for sure, because we have not received that amount and they have specified. For the remaining saris, now we have read the entire question, there is no specification for the remaining sari. So how much is the remaining? 2500 minus 25, that is 2475 saris. We will assume that is for cash. Now it can be possible that out of this only 2000 saris are sold on cash, 475 saris are sold on credit, or it can be possible that out of this only 200 or 300 saris are sold for cash, rest all are on credit. But we cannot assume this is for sure. So since nothing is given for the remaining sari, we assume that is for cash. So if nothing specified for the sales, we always assume cash sales in case of consignment business. So guys, you understood this question. Now we'll start solving this question. So now first, Shalin-Traders purchased 5000 saris, so that will not record. But out of this, 3000 saris are sent on consignment, so that would be our first entry. Goods sent on consignment would be debited to consignment account. So consignment account debit to goods sent on consignment account. Now this is 3000 sari of rupees 100 each. So this would be 3 lakhs. Now second effect of this goes to goods sent on consignment account, but they have not asked you to prepare that account. So we have not prepared that account. Otherwise second effect goes to goods sent on consignment account credit. Next, with an instruction to sell the saris at a price of 150. So when the consignee is selling the sari, he is instructed to sell at least at 150 per sari. The consignor paid 15,000 for insurance and freight. So now this is your expense. Now after doing the two questions, you must be sure all the expenses will go to consignment account debit and income goes to consignment credit, because this is your nominal account. So consignment debit, expenses to cash bank. Instead of that, that would be consignment to cash bank. So to cash bank account, this is your expenses. We write the name of expenses, insurance and freight, and the amount is 15,000. Next, during transit 100 saris were damaged by fire. Now this is your abnormal loss. We have already seen the entries for the abnormal loss when we have discussed journal entries. So what is the entry for abnormal loss? Abnormal loss account debit to consignment account. Since goods are going out we have purchased 3000 sari for consignment, or we have sent 3000 saris on consignment. Out of this 100 saris are lost, so we credit for that 100 saris, but we need to find out the cost for that sari. For that we'll do valuation of stock. So we'll start preparing our first working note. Working note 1, valuation of stock. We prepare 2 columns, quantity and amount. First what we do, goods sent on consignment, that is your purchase cost. So goods sent on consignment is 3000 sari at a cost of 3 lakhs. Now as per AS2, to the cost we also add direct expenses. So add consignor's expenses, consignor's all expenses. All the expenses for the purpose of purchase is to be added. So for that quantity would be 0, but the expense of consignor is 15,000. So you add 15,000. So now 3000 quantity or 3000 saris are worth of 3,15,000. When these expenses are done, before the goods has reached to consignee, 100 saris were lost by fire. So we will not add consignee's expenses now. First of all, we'll pass the entry for abnormal loss, or we'll calculate abnormal loss amount. How many saris they have told you? So in question, if you see, during transit 100 saris were damaged by fire. So abnormal loss 100. What would be the amount for this abnormal loss? Cross multiply 100 into 3,15,000 divided by 3000. So that comes to 10,500. So what we have done, if 3000 saris are worth of 3,15,000, what would be the cost of 100 saris which were lost by fire, and that is 10,500. So when you deduct this, minus 3,15,000, so this comes to 3,04,500, and this is 3000 minus 100, 2,900. So passing the entry for abnormal loss. Now abnormal loss would be credited to consignment account because goods are going out. So like we do in normal final accounts, like goods destroyed by fire, so what effect we give? Trading credit. So instead of trading credit, we do consignment account credit, abnormal loss account. Now if they ask you to prepare loss by fire, the name is loss by fire, then you write loss by fire account. If it is abnormal loss, then you write the name as abnormal loss account. As per working note 1, 10,500, and this would be debited to abnormal loss account. 2, consignment account 10,500. So this is done. Next, Shalin traders received 10,000 from insurance company. So for this loss, they have received 10,000 as a claim. So when we receive the claim, we pass the entry as cash bank account debit because we have received the amount. So cash bank account debit 2. This is receipt for abnormal loss. So now what we have done, we are debited abnormal loss account with 10,500. So we are saying that okay, we have suffered a loss of 10,500. But out of this, we have received the claim of 10,000. So our loss reduces. So we will credit that loss account over here, claim amount over here. So entry is cash bank account debit to abnormal loss account. So your loss reduces by the amount of claim because that much you have received from insurance company. So by cash bank account, in bracket we can write as insurance claim 10,000. So this much amount we have received as claim. Next, Zinc took the delivery of the remaining saris. Zinc sold 2,500 saris at 160 each. Now this we have already discussed that out of this we will assume 25 on credit because that was already specified. Since nothing specified, 2475 on cash. No Del-Credere commission is given. Datas will appear in the books of consignor. So we have also prepared consignment datas account in the books of consignor. So passing this entry for sales, sales goes to consignment, credit, that is your income. By whatever is the cash sales, that amount will receive from whom? From Zinc, that is your consignee. So by Zinc account, your entry is cash bank to sales. Cash is received by Zinc. So we'll say Zinc account debit. And instead of sales, consignment credit. So Zinc account debit to consignment account. So by Zinc account, cash sales, and that is, so by Zinc account, cash sales is 2475 sari into, now this sari are sold for 160. So 2475 into 160, this comes to 3,96,000. Second effect goes to zinc account debit to consignment account. Sales 3,96,000. And for remaining 25 on credit sales we pass the entry as debtors to sales. So over here the entry would be consignment debtors account debit to sales account. So by consignment debtors account, that is for 25 sari at 160 each. So this is 25 into 160, 4,000, and consignment debtors debit to consignment account sales 4,000. So this much is done. Now for this sales we can write a assumption at the end of the question that we have assumed that 25 sari is on credit and remaining saris are sold on cash. That we can write on the end. So after completing the question we will write the assumption. Next, and incurred 5,000 for selling expenses. So this is the expense done by the consignee. All the expenses related to consignment account would go to consignment debit, but this is paid by zinc. So we will say to zinc account, that is for selling expenses 5,000, and second effect goes to zinc account credit by consignment account expenses total 5,000. Next, and emitted 2,50,000 to Shalin traders on account. So we are receiving 2,50,000. So we will say Shalin trader. We are in the books of Shalin traders. So assume yourself as Shalin traders. So we are receiving 2,50,000. So we will say cash bank account debit to party account, that is the zinc account. So zinc account credit by cash bank account, that is 2,50,000. You can say this is received as advance or on account, that is okay. They are entitled to a commission of 5% on total sales plus a further 25% commission on any surplus price realized over 150 per sari. So this is ordinary commission and this is overriding surplus commission. Now commission again an expense for the consignment business, so it would be debited to consignment account. To, and it is payable to whom? Again it is payable to zinc account. So to zinc account commission. Now you can prepare a working note for the same, or you can show the calculation over here itself. It is 5% on total sales. So total sales mean cash plus credit sales. So this is 4,000 plus 3,96,000. So your total sales is 4 lakhs, and 4 lakhs into 5%. So into 5% is 20,000. That is your ordinary commission. Plus a further of 25% commission on any surplus price realized over 150 per sari. So since the saris are sold as 160, so 10 rupees extra on each sari on that 25% commission. So this I can say as 2,500 saris which are sold, on which 160 minus 150, any surplus realized over 150. So that is your 10 rupees surplus, on which commission is to be given as 25%. So this is 160 minus 150, 10 rupees extra into 2,500 into 25%. So this comes to 6,250. Now this commission is payable to zinc. So zinc account credit by consignment account, we will say commission, and we will give the total effect. So 20,000 plus 6,250, 26,250. Okay. Next, one of the customer to whom the goods were sold on credit could not pay the cost of 25 saris. So this I can say, this is my bad dates. And what is the journal entry for bad dates? Journal entry for bad dates is bad dates to daters. But over here, instead of bad dates, your any expense or loss will go to consignment account debit. So we will say consignment account debit to consignment daters. So bad dates to daters, that is consignment to daters. So we will debit the consignment account to consignment daters account, in bracket write as bad dates, and entire this 25 saris, on this 25 saris the debtor become insolvent, or he is not able to pay. So that is for 4,000. That selling price for 25 sari was 4,000. And the second effect what bad dates will go to consignment daters credit by consignment account bad dates, and that is 4,000. So bad dates to daters, that is consignment to consignment daters. Next, 1,500 saris sold by Shalin traders at 140. So this is on account of his normal business. So that will not be recorded in your consignment accounting. Owing to fall in market price, the value of stock of sari is to be reduced by 5%. So this is our last adjustment. We need to do the stock valuation, that is closing stock. But before doing that, just overview the question that we have taken all the transaction. So going through the basic normal transaction of consignment, goods are sent, consignor's expenses are done, consignee's expenses are done, sales are recorded, commission is due to the consignee, so that basic transactions are done. Second effect of for this Zing is given in Zing account, Datus is given in Datus account, and abnormal loss is recorded in abnormal loss account, against which we have received insurance claim. So we are done with all the basic transaction except for the closing stock. Now closing stock, since the market value is given, we need to do cost or net realizable value. So this whatever I have started, this is your cost, and that then we will do net realizable value, and whatever is lower, that amount will go to closing stock on consignment. So now this much is done, goods sent, consignor's expenses are added, there was transit loss by fire, that is deducted abnormal loss. Next we add, the goods are received by the consignee. So we add consignee's non-recurring expenses, all the expenses till the goods reaches to the go down. But if you see consignee's expense, there is only selling expense. So there is no non-recurring expenses of consignee. So we don't add selling expense to the cost of goods, okay? We add direct expenses, purchase direct expenses to the cost of goods. So we will not add this selling expenses. There is no further abnormal loss or normal loss. So this I can say value of good quality stock. This we compare with the closing stock. Now what I have written, 2,900 sarees are worth of 3,04,500. So closing stock is 2,900 minus consignee sold 2,500 sarees. So minus 2,500. So remaining 400 sarees are worth of how much? So cross multiply 400 into 3,04,500 divide by 2,900. So that comes to 42,000. This is your cost element. Next, since the market value is given, we will do net realizable value also. Now how we do net realizable value? This we have already discussed in the valuation of stock session, that first of all we take the market value of the closing stock or closing quantity, market value of closing stock. Now my closing stock are 400 quantity or 400 sari into what they have said, owing to fall in market price, the value of stock of sari in hand is to be reduced by 5%. Now these sarees worth of 100 rupees, though it was instructed to sell at 150 and consignee sold at 160, but the market price or purchase price of these saree was 100 rupees, and now the price has reduced. Now you cannot say price is reduced from 150 or 160, because these were the price which was decided by the consignor or consignee to sell their sarees, okay? But the market price of the saree while purchasing was 100 rupees when Shalin Traders has purchased. Now this stock we account in the books of Shalin Traders. So for Shalin Traders the stock cost 100 rupees, but now stock is reduced, stock value is reduced by 5%. So 400 quantity into 100 minus 5%. So that is at 95 rupees you have to value your 400 sarees. So multiply 100 minus 5% is loss in the value, 95 saree into 400 quantity, that comes to 38,000. Now this is the market value, but when I'll sell this saree at 38,000, that is for sure that Shalin Traders will have to pay commission to Zinc Traders. And if you see commission was 5% on total sales, so this has to be paid. Whatever the amount your sales is there, you have to pay 5% commission, so that would be obviously deducted from your sale proceeds. 25% commission is when your sarees are sold at a price more than 150, but since the market rate is fall, your sarees are valued at 95, so that extra commission will not be there, but you have to pay basic ordinary commission, so less commission which is to be payable at 5%, commission at 5%, so 38,000 into 5%, that is 1900. So deduct 1900 and is equal, so that comes to 36,100. This is your net realizable value. So now if you see, the cost of saree is 42,000, but the realizable value of these sarees in hand is 36,100. So at what price we value our closing stock? 42,000 or 36,100? Yes, 36,100, because that is the NRV which is lower than the cost. So your closing stock will be equal to cost or net realizable value, whichever is lower. So this would be valued at 36,100. Guys, you understood this? Now we'll pass the entry for this stock. Closing stock comes on consignment account credit by stock on consignment working note 1, that is 36,100. So this is your closing stock. So now we are done with all the adjustments related to consignment, goods and expenses, commission, CAs, closing stock valuation, cost, NRV. So this was a new thing in this question where you have done the cost or NRV comparison. Now we will close our accounts. Now when we close our accounts, we can start from consignment or from these accounts. I am starting with the consignment account. So find out is there is a profit or loss. So now we will find out profit or loss on consignment. So credit side seems higher, so we'll check 10,500 plus 3,96,000 plus 4,000 plus 36,100. So this is 446,600 minus 3 lakhs minus 15,000 minus 5,000 minus 20,000 minus 6,250 minus 4,000. So this comes to 96,350. That is your profit, and total was 446,600. I had kept the total in M plus. So from MRC you get the amount that you can do. This will go to profit and loss account. I can say this is your profit on consignment. So Shalin Traders has earned, though there was a loss of bad debts, but net Shalin Traders has earned 96,350 from this consignment. Closing this Zing account. Now see whether the balancing figure is paying us cash by bank or it is to be carried forward. So if you see the question, there is no instruction regarding the final settlement amount. Okay, so whatever the balance is there in the Zing account, that would be carry forward. So total is 3,96,000. 3,96,000 minus 5,000 minus 2,50,000 minus 26,250. So that comes to 114,750. This would be by balance carried down. Next, abnormal loss account. Now in case of abnormal loss, there was a loss of 10,500, but out of which we have received a claim of 10,000. So there is only net loss of 500, which would be transferred to P&L. So guys, this abnormal loss account is very simple. These are the three effects which you generally do in your final accounts. If you remember, whenever there is loss by fire, we give three effects: trading credit with the entire amount of goods lost, then asset side, if the insurance claim is receivable, that amount of claim, and whatever is the net loss, that goes to P&L debit. Now over here we have done the same thing. Whatever the amount of loss is there, trading credit, instead of trading we prepare consignment. So consignment credit, and we have posted to a new account, that is abnormal loss account, out of which you have received the insurance claim. If the claim was not received, it was receivable, we would have written by insurance claim account. Since it is already received, we have written cash bank account, and whatever is the net loss, that goes to P&L debit. And your consignment account, consignment debtors account tallies, because whatever your 25 sarees bad debts was there, that was only assumed as credit sales, rest was your normal cash sales. Okay, so now we are done with all entire question. For this we can write an assumption, we can write a note, assuming 25 sarees are sold on credit and rest on cash, since no information regarding the same was given. So this we have written the assumption. The loss of bad debts is borne by the consignor, since there was no Del-Credere commission. So since Del-Credere commission was not given, the loss of bad debts is borne by the consignor. So in this case we have learned new things like abnormal loss. So this is your abnormal loss account. There was no Del-Credere commission, and how you deal with the bad debts, that was second new thing. Third, we have learned the valuation of stock on the basis of cost or NRV. If they don't give you market value, we don't do this. We will just find out the cost of closing stock and we record your closing stock at cost. Okay, so these are the new elements in this question. You can just refer the question. So that's it for today. I hope you are enjoying this session. If you have any query related to it, do post in the comment section given below. Stay tuned with us for more such problem solving sessions with us. Thank you.